Good morning, everyone. To today's webinar, we're going to be talking about the major real estate correction that's expected in 2024 and how you can position yourself to profit during this historic opportunity. Okay? First, I want to acknowledge that it's been crazy last few years, right? The economy and real estate markets specifically have been absolutely insane. You got the pandemic, you got record high inflation, you got soaring interest rates. It's all led to a great deal of uncertainty. So while the Fed has tried to soften the blow through policies like quantitative easing or QE, we're still facing crumbling home sales with record high rents. Commercial real estate is facing its own reckoning as businesses rely on hybrid or fully remote work models too. So everything's being upset, okay? And this is really just the beginning. Experts are predicting that 2024 is going to bring the largest real estate downturn since 2008. With higher borrowing costs, you got depleted savings, you got recession fears, buyers and investors are sitting by the sidelines waiting to see how things go. Now, before I get into all that fun stuff, let me tell you a little bit about myself and about what we do. So my name is Agostino. I'm with Bulletproof Cashflow. And I've been in the real estate game for a little bit now. It's 17 years at this point, right? 18 years. And I got in before 2008. I saw the crash in 2008 and we made it through, right? The thing is that there's a whole lot of opportunity that's coming. And I can tell you that when the opportunity comes, you just got to be able to seize it. And how do you do that? You come out to meetings like this, to webinars like this, and you start getting the knowledge, right? I did that. That's how I grew my business, right? Today we actually have 4 lines of business. The first is our multifamily business. We acquire B and C type assets. The second is our development business. We do ground up and we do adaptive reuse. Primarily urban infill is what we're targeting. The third line of business is net lease, okay? So we do single tenant net lease deals where there's a corporate-backed or a franchisee-backed guarantee. And so we're looking for Dollar General, Dollar Tree, VCA Animal Hospital, like big brands that are not gonna go out of business tomorrow. And the fourth line of business is our media and education business, where we basically help other folks get into the real estate game and build success in real estate too, either starting or scaling their multifamily portfolio. Okay, so we do all that. If you want to know more about how that kind of stuff works, by the way, go to multifamilyaccelerator.com. You can learn a little more about our accelerator program. It's a 50-week mastermind, okay? So go ahead and check that out, all right? Regardless, today is a day. Now is a time to prepare. It's not time to panic, okay? It's time to prepare. Successful real estate investing requires tuning out the noise and looking for the opportunity when there's a whole lot of chaos. While others are paralyzed with uncertainty, savvy investors should focus on the fundamentals. You have prices, you have sales. Sales may waver in the short term, right? But over the long term, real estate value will increase, okay? It all goes back to the fundamentals. You have population growth, you have land constraints, you have rental demand, you have all those things that are gonna drive the overall value of an asset, okay? So before I really kick things off into high gear, I wanna give you some more context around what's exactly been happening in the housing market, okay? Existing home sales have now fallen for 9 straight months. Okay, just recently in August, sales were down 19.9% from 2021. That's the largest annual decline since May of 2020. The number of homes available for sale has started to go up, rising 12% over 2021 too, right? This past year. Inventory is still low, right? It's still low, but we really still need to build, right, to satisfy pent-up demand. So the good thing is that there's still demand out there, right? We're still developing stuff. I mean, certainly the cost of development has gone up tremendously too. We're aware of that. But again, the same sort of rules apply. We do look for certain assets that we're building in certain areas. All the key fundamentals apply, okay? The home ownership rate for young adults, right? You're talking 24 to 35 young millennials basically, has dropped from 48% just before the pandemic to 43% as of Q2 of this year. So rising rates have locked out many first-time home buyers out of the market. They just can't afford to even get into the deal. So now that's on the residential side. On the commercial side, you have rising cap rates have led investors to basically just back off completely, right? They're just concerned that the values are just not there to justify the cost of debt. So commercial real estate sales through August of 2022 are down 18% from the same period last year. Meanwhile, you have the ongoing remote work arrangements that are challenging offices and challenging companies as well. So there's a whole lot to deal with, right? So where should we be looking in the years ahead? So here are some 3 promising strategies. The first is to target affordable metros. I like Ohio. I'm actually in Ohio right now, but the Midwest still has plenty of value. You have Ohio, you have Indiana, you have Missouri, you have Iowa. They've never seen the frenzy price gains that you see on the East Coast and the West Coast, or even down in Florida or in Texas. Investors should still be scanning for the bargains in these Midwest markets, in these heartland cities, okay? They offer a great deal more stability, decent job growth, and growing population, because we've in the Midwest, we've seen all that over the last decade. So if you focus on necessity-based housing and avoid any type of scenario where it doesn't look like there's a whole lot of jobs, you're going to be just fine. Now, let's dig deeper into the fundamentals supporting the Midwest. Why the Midwest, okay? Ohio, in particular, stands out. It saw faster population growth than the national average between 2010 and 2020, okay? So in that decade, big population growth. Columbus ranked as a top destination for people relocating from the coastal cities. And the cool thing about Columbus is that it has that big city feel, but you get to enjoy many of the Midwest amenities, So if you haven't been to Columbus even to visit, you should definitely check it out. Columbus is a great city, right? Like I said, I'm in Cleveland, and Cleveland's a great city too, So many of these cities are it's a big, small city, right? But these Midwest regions continue to add high-paying, advanced manufacturing and medical jobs, okay? Especially here in Cleveland. There's a lot of healthcare, a lot of medical, that kind of thing is huge here, okay? Huge. And the Midwest has largely been a big manufacturing hub to begin with. But you have states like Indiana and Ohio that have seen manufacturing, the unemployment dip below 3% as facilities expand. So this fuels household formation and housing demand too, because these people that are coming to work need a place to live. Makes sense, right? But you have Midwest metros like Indianapolis, Columbus, and Kansas City that now score higher for investor metrics. Basically the cap rate or cash on cash return compared to the coastal rivals, if you want to call it that. It makes sense to do it here. Of course, we're not always basing it off of a cap rate, all right? Cap rate is just an indicator, right? It's a very high level indicator. We're always looking for NOI, but you know what? It says that there's still a great deal of growth here. So I think you can expect to see a lot of yield coming from this type of region. Okay, what else? Number 2, look to alternatives like manufactured housing. Now, with more people priced out of site-built homes, land lease communities and manufactured homes should see a heightened demand, So these naturally affordable options provide some pretty recession resilient cash flow. So investors can target an 8 to 12% cash on cash return on some of these houses. So manufactured homes have evolved from the old, trailer park days, right? Tenants today are a little older. Their incomes are in the mid 50s, $50,000 range, right? And site rents might be $500 to $600. So opportunistic investors can scoop up these communities at pretty good prices. I mean, there's owners I've spoken to, and in our mastermind, we have one of our students that is really, really big on these types of assets. They're seeing the type of value and the type of returns that are crazy in these types of assets, right? So maybe something to consider. It is a whole different model compared to multifamily. It's very different, right? However, on the surface, if you can master how these types of deals work, you can do very, very well. Okay? Number 3, consider distressed opportunities. So instead of fighting for, trying to find a great deal and especially where it comes to rising cap rates and the cost of debt is also going up, right? Lean into the correction cycle. As properties get repriced and over-leveraged investors, they face maturity, patient capital can pick up assets for much, much less than what it was to buy it from the last person, right? So by targeting functional buildings and growth areas, you can really capitalize on a deal. You can help out that investor by taking them out of that deal, and you can help the lender by basically, getting the asset off their books, right? So distressed deals require an opportunistic skill set and a higher risk tolerance too, okay? So it's not just for anybody. I wouldn't recommend you doing it for your first deal, okay? If it is gonna be your first deal, make sure you partner up with someone that has done it before and they're seasoned at doing this. Like, they have the infrastructure, they have the people, they can get their hands on additional capital, because typically in these types of deals, you have to have access to a lot of money to turn the ship around, right? So the next several years could basically rival what happened in 2009 to 2012. Okay, there's a whole lot of potential there. Okay, and really what it comes down to is watching for half-finished subdivisions, for instance, right? Maybe stalled ground-up projects that maybe a developer has, and they want to just get rid of the whole deal itself. Maybe you're looking for a suburban office type of deal, right, where it's a vacant building or half vacant, and the person wants to get rid of it. Or maybe there's a brick and mortar retail spot that just didn't make it through the pandemic, and the owner's sitting on the deal, and you might think it might be a good opportunity to convert it to multifamily. Right? It really, you have to keep your eyes out for those types of deals. And if so, you might be well positioned to get your hands on a great deal while helping those people out. So while uncertainty is aplenty out there, those who tune out the noise and focus on sound real estate fundamentals will find themselves vastly ahead in the years to come. Okay, so now's the time to really position yourself. So if you want to know more about how to do this kind of stuff, like I said, check out the multifamilyadvantage.com or multifamilyaccelerator.com, right? We can show you guys how to get into the real estate game. And if you're watching this on YouTube in the replay, please go ahead and subscribe to the channel, like this video. It helps us out tremendously when you do. If you want to see more of this type of content, please go ahead, smash that like button. Helps us out tremendously when you do, okay? And, I try to bring as much as I can to you guys to really help position you to take advantage of what's to come here, okay? So, happy to keep this discussion going and explore other real estate strategies as well. For those that are interested, like I said, okay, we are we're doing these webinars maybe twice a week now at this point, right? And we are, if you're interested in maybe setting a time, go ahead, click the link in the description, all right, in the replay actually, and go ahead and check out. Set a time you can talk to one of our folks, and again, maybe we can set a time to talk and get you into one of our programs, okay? Anyway, It's going to be a short one today. I wish you the very, very best in your investment journey. Don't worry about 2024, guys. A lot of noise out there, but what it comes down to is positioning yourself for the great opportunity that is coming, okay? Stay positive, stay optimistic, believe in yourself, because the future remains bright for those that are willing to adapt and take decisive action. Fortune favors the bold, my friends, okay? Go ahead and let's line up and take advantage of this historic opportunity in 2024. Thanks for tuning in, guys. I'll see you next episode.